You look at that dedicated space that you have in your home, and you can offset your overall home cost to that percentage. So
Oh,
that includes your rent, your mortgage, your utilities, your internet, and anything. So there's direct fees that are directly related to that office, and there's indirect fees that are related to the overall home. So I think that you should be meeting with your tax strategist, AK, or accountant at least quarterly, right? Because that's how quarterly taxes work too. We need to see what you make at a minimum. Most of my clients, we meet monthly. Some we meet quarterly, depending on where they're at in their business. But
mhm.
at least from a quarterly perspective, you can look to see how much you made in that quarter, what the expenses you had in that quarter, where were they categorized, and then what strategies could you implement to see what you should be sending in for estimated taxes.
What are some of the things you can help us do or tell us to do to help us feel a little bit more in control of our finances? Taxes. Today, we're going to be talking about taxes and sharing those secret strategies that can help you transform your financial future. Are you ready? Let's go. Welcome to the Own Your Brand Show. I'm your girl, Victoria Odekomaya. And in this episode, I have my dear friend, Katrina Martin, joining us. And she's an enrolled agent as well as a certified tax strategist with over 20 years of experience. She helps real estate investors and entrepreneurs make sense of their taxes and keep more of their hard-earned money. So today, without much ado, I want to dive into this conversation and share all those secrets to help us save more money. How are you doing today, my friend?
Absolutely. Hi, Victoria. It is a pleasure to be here. Thank you for having me.
Oh, absolutely. So when we were talking about this initially before starting this, I was like, well, I've been struggling with my taxes. I took the extension until October 15. And even then I was like, I gotta get, so. But the thing is that even though that time is past now, we're really at the end of the year and we're getting ready for the next tax season. So it's still relevant conversation. And one I think that everyone, business entrepreneurs, as well as real estate investors should be talking about. So before we get into this, I know that I read somewhere where you said $100 tax course changed your life. Tell us about that.
Absolutely. Well, I think, and I'm so excited that you talked about the deadline and then how we're already at the end of the year, because taxes is year round, right? You start and you stop and you just you checking the boxes. But for me, my journey in the tax world started back well over almost 25 years ago at this point. I had just recently gotten divorced. I was facing bankruptcy, had two small daughters that I was fully responsible for at this point. And I was working a 9 to 5 that was a low paying job in school, working on my bachelor's degree. So it was just a lot of things going on at a little bit of time. And I was really young. And I saw this tax course and it was $100.
Wow.
And I think it was a 6 to 8 week tax course.
Wow.
I barely had the $100 to pay for the course, right? But I kind of, I put the money to get together to get the course. Went and took it. It was an 8-week live training, and it changed my life. It really did. It changed my life. Because it opened up a lot of things to me. First of all, it taught me what the tax code was. That was my introduction into how money really works and how it nets out.
Whoa.
And then it also taught me how you can control how much you pay, how little you pay, and how do you keep your own money, right? That was really the key for me to go down this journey. And here where I sit today, I teach others how to do that same thing, how to understand what the tax code is, how to apply it to their life, their own particular life, and to meet their goals, whether you want to purchase real estate, whether you want to retire early, whether you just want to make sure that your family is financially stable, whatever that goal is, there's a loophole in the tax code that can help you get to that.
Okay, I'm glad you said that and I'm glad you took that $100 course, because you're going to be sharing this with us here and in some of the programs that I know you have. So Let's dive into it, because I think that I've been hearing a lot about this. I'm relatively new to businesses. I'm being a business owner 3 years ago. And, we talk about taxes and it's a big topic when it comes to, but at the end of the day, if people are not really thinking about it, we really should be thinking about what is the exit strategy for our business. But so that, those tax questions come into play at that point. Beyond that, even before that, how do you even keep more of that money that going from a 9-to-5 to a business owner, like you're not doing 9-to-5 anymore. You're doing 24/7. And if you're not able to keep more of that money, it's kind of like at the end of the day, you might be like, wait a minute, why am I doing all this? So I'm really excited about this conversation. And I know you're going to be very, very open and sharing with us really good information.
Absolutely.
So one thing I wanted to start off with is like, what are some of those tax mistakes that we make or we should also be aware of when it comes to our businesses?
I think the number one tax mistake, and I say this on standing firm on this, is that people don't think about taxes until tax season. Where taxes are year round, and you have to think of it from this perspective. If you think about how much you actually pay towards taxes, it's about 50% of what you're making. Right? So if you make $1 and you have to split it 50 to 50 cents, you're going to be really mindful about, can I keep more of my own money? Can I just give them 20%? How can I give them 10%? How can I give them nothing of it? Right?
50% is a lot.
Legally. And I know that sounds, people start thinking about the tax rates and all of those things, but from most times people only think about it from a federal perspective.
Okay.
Just taxes on everything.
Right.
You pay federal taxes, you pay state taxes. Even the states that don't have state taxes, you're paying all taxes on all the things you purchase. So a lot of your money is going to taxes. So that is something not to think about for 3 months in the year. That's something to think about every day, right? Yes. And so when you put into that perspective and you're thinking about how do you manage your money and how are you budgeting, if you're drawing out a budget, that should be included in that. So where I find most business owners make the mistake, especially going from a 9-to-5, because I did it too, right? I went from a 9-to-5 and opened my firm several years ago fully. It was open. I was side part-time like most people do before they go full force. And the one thing that stuck in my mind was when you're 9-to-5, you're managing your paycheck. So everything, all the taxes have already come out. All of the deductions have come out. As a business owner, you have to really shift your gears because now everything happens before that. Money, you pay all of these things and then you report what happened.
Yes.
Right. So it's different than that 9-to-5 where everything's happening for you. Yeah. So you're really in control of that. And so that's really the shift that a lot of people have. And people try to save money in the worst places, right? Like, I'm not going to pay for a bookkeeper now because I can't afford it. You can't afford not to.
Okay. I did that for a while. So.
And we just really have to be transparent about it, right? Because you're like, I can't afford it. But as a business owner, there's certain things that you can't afford not to do.
Right.
You can't afford not to have, what I find a lot of times too is people say, oh, I have an accountant. But how often are you talking to them?
Good.
Talk to us at tax time. Yeah. So do you truly have an accountant or do you have a tax preparer? It's a difference.
Good question. Yes.
It's a difference because your tax preparation is not the time for strategy. Everything that you're reporting happened the prior year.
Yes.
So there's not a lot that you can do when the year is already passed, right? Be talking to your accountant and your tax strategist throughout the year to make sure that you're getting those strategies and that you're implementing them properly so that you stay compliant and you're always audit ready.
Wow, I like that. So one of the things that you said that hit me was that, as a 9-to-5, they've taken all the taxes away for us. And then when you switch into your business, you don't pay taxes until the end, but you've already paid all the state, like your expenses and other things. And you feel like, okay, I got to keep this money. But then in my reality, it's like, okay, no, all this money, you still then have to give a whole bunch away. And I'm like, oh, so it's a light bulb just went up like, okay. So I agree with you. Definitely we need to be having these conversations with our, accountants throughout the year because it's a big bill usually at the end of the year when we don't do that.
Absolutely. And thinking about it from a perspective too, I think that you should be meeting with your tax strategist, AK or accountant, at least quarterly, right? Because that's how quarterly taxes work too. We need to see what you make at a minimum. Most of my clients, we meet monthly, some we meet quarterly, depending on where they're at in their business. But at least from a quarterly perspective, you can look to see how much you made in that quarter, what the expenses you had in that quarter, where were they categorized, and then what strategies could you implement to see what you should be sending in for estimated taxes, right? Or if we need to put you some strategies in place where we maybe shift your entity structure, or maybe there's some deductions that you're missing that we go ahead and implement to make sure that you're getting those things. But it's not something that we can do April 15th or March 15th. That's something that we need to be doing like right now and throughout the year to make sure that you're having those things, because a lot of times people don't realize as well, if you haven't paid any estimated taxes throughout the year, and when you do file, you're paying a penalty on top of that for not paying those estimated taxes on top of your tax bill.
Oh, wow.
Yes. Okay. And so you're costing yourself not only the money, but more money, right? Yeah. So there are things that you can't, that just waiting to that once a year, it's costing you more money in fees because you're missing the mark. So while you're trying to save money, you're ultimately hurting yourself and costing yourself more money.
Okay, let me dive in about that question about what is really estimated taxes quarterly. What does that even mean? For those people out there like me that have no idea, help us understand that.
The best way I can describe it is it's like a mini tax return to some degree. It's not a tax return. You're not actually doing the 1040. However, you're looking at how much income you made in that quarter. You're looking at how many deductions you had in that quarter to see what your net income is, right? And then based upon that net income, what your tax rate is and how much you should be paying just for that quarter on that income you made in that quarter.
Oh, wow. So do we...
That way...
Go ahead.
So that way you're paying smaller portions of the tax time. You're paying those smaller portions of taxes throughout the year. So when the new year rolls around and you file your taxes for compliance, then you've already prepaid those taxes and you're not paying a penalty and you don't owe this huge bill at the end of the year.
That's good. And I think that when it comes to strategy, which you've mentioned a little bit about earlier, if you find that you are paying a lot in the first quarter, maybe that's when we need to have a conversation about what we need to do differently. So the next quarter's coming up, we're not paying too much, right?
Absolutely. And that's why those quarterly meetings are so important, because we're looking at it for that quarter, but we're looking at what happened prior as well, right? Because if we're in fourth quarter right now, you've already had 3 quarters that you've looked at. So maybe you've actually overpaid, right? Based up, maybe this quarter is a lower amount. So maybe you don't even need to send anything in, right? So sometimes it could be that you're doing yourself a disservice by not looking at it from a quarterly perspective, because now you've already penalized yourself by not following the rules. Right. So the IRS has these little rules in place to make sure that you're not just sitting on that money all this time, right? But the benefit of that is, like we said, you get to take those deductions. So that's where we talk about the strategies and the loopholes to make sure that we're getting you all those deductions in that quarter, so you're paying a lower amount.
Okay, let's talk about these loopholes. I know we all want to hear at least one of them that you can share. Yes. So give it to us.
The one that I feel that most people miss and that most people qualify for is the home office deduction. So whether if you're a business owner, when I'm reviewing tax returns for people, sometimes we'll do a tax analysis for people and we'll review their return. That's the one thing that I see missing most times for business owners, because they'll think, oh, I'm just working out of my house, I can't write my house off. Oh, you can. Wow. You can. So if you actually have a dedicated space in your home, whether you're an entrepreneur or real estate there you go, real estate investor, you look at that dedicated space that you have in your home and you can offset your overall home cost to that percentage. So that includes your rent, your mortgage, your utilities, your internet, and anything. So there's direct fees that are directly related to that office, and there's indirect fees that are related to the overall home. So we need to know what your square footages are to see which ones are going to be the most beneficial for you. But that's a deduction that I see most business owners miss. And that's usually the one thing that when I can always catch it, when I'm reviewing their Schedule C or their business return, and I won't see any rent that they paid out to any place. And I'm like, did you rent out any spaces? No, I just work from home. Okay, well, where's your home office deduction, right? And so those are things to think about. Now, I know what we had happen too was during the pandemic, a lot of people shifted their, a lot of jobs let people work from home.
Yeah.
Now, in that instance, because you're a W-2 employee, your employer's already paying you, so you don't get to do the home office deduction with a W-2. But as a business owner, that's why those side hustles are so important, right?
Yeah.
Because as a business owner, you do get to deduct those costs.
That's really good. Okay, what about car?
So there's a couple ways that you can do auto deductions, right? So as long as you're using the car for 50% or more for business use, you can choose to do mileage. So you're going to write off the miles. And we usually recommend that for people that are doing a lot of miles, like realtors and truckers and things like that, because the mileage is going to be whichever is greater. Okay. So mileage is option one. The alternative is actual expenses. So you may write off a lot of Uber drivers and people may go this route because the actual expenses for repairs and maintenance and maybe even the car payments and all of those things are actual expenses. But the thing to know, whether you go mileage or actual, which vehicle you have in your business that you're using that for, you need to be keeping the records for that. And whichever option you choose, you can't switch every year. You can't keep changing it. So with that VIN on that vehicle, whichever option you select, you're going to need to keep that until you change out the vehicle.
Okay. Wow,
so either actual or mileage. So those are the two options. But the one thing that I think a lot of times people don't think about is the tracking of that, especially if you're doing the mileage. You're going to want to keep a log of that.
Yeah, and I didn't do that for a while until I think I signed up for QuickBooks, and QuickBooks is able to even help you keep track of some of that.
Absolutely. Yeah, there's so many apps now and some are free. So, there's no, back in the day you needed to write it down. So it was a lot more difficult, but now these apps on the phones, and then you can even pull histories from when you've gone to meet up with a client or when you've gone into another space to do some work. Yeah. So you can keep track of that. So definitely utilize the apps to make sure that you're documenting, because the one thing I think a lot of people are afraid of audits, but there's actually nothing to be afraid of if you have your ducks in a row.
Okay, that's good to know. That is good to know. So let's talk about tax code. I know you said that a lot too, and that's something that you help people with. Yes. So tell us a little bit about that. What do we need to know about tax codes?
The one thing to know about the tax codes is there's thousands. And there's benefits to utilizing it to your advantage, right? So there's strategies that you can layer on top of each other. Another strategy that a lot of people don't know about and miss out on is the Augusta rule, where if you rent your primary residence out 14 days or less per year, using the fair market rental rate, you can write that off in your business. Let's say, for example, that you rent your business, but you bring your home out to your business 14 days or less per year. Let's say every month you do like a strategy session for you and your team. You and your team could be you, right? But you block your home out for that time. You do a lease agreement between you and your business. You actually look at the fair market rental rate. So your business is going to pay you every time it uses your home. You get to take that deduction in your business, but you don't have to report the income on your personal side.
Okay. Like, I feel like you just opened up a whole new world. So like I can rent my own home to my business.
Absolutely. It's called the Augusta rule, and that's one of the tax codes. And that's one that a lot of people sleep on. And it's thousands of dollars that you can save deducting your business every year and put back into your own pocket. And, it's just so many strategies that a lot of people just don't understand that are written in the tax code that are legal to use. But if you don't understand what those are and how to properly implement them, you're leaving money on the table.
I can see that. And I think that for sure, we need to have the professionals, people like you that understand all these thousands of tax codes, to be in our business and be partners in our business, not a one-time transaction at the end of the year, because you understand that you can help us strategize how we can use certain things, or like call attention to some things in order to help us keep more money in our pockets.
Absolutely. And when I'm doing calls with potential clients and things like that, the first thing people will say to me, "Oh, I have a CPA." And I'm like, "Okay, so what strategies are you using?" What do you mean? They file my taxes. And I'm like, okay, so that's tax preparation. That's not a strategy, because that's just reporting what happened.
Right.
We're not adding in layers of strategy there, because we can't. We're just reporting what is the reporting system. So it's not just we'll ask additional questions to see if maybe there was things that you did that you didn't capture, to make sure that we're implementing, making sure that that's noted. But we're not in there layering in strategies, because we can't. How would you implement the Augusta rule if you didn't actually do the things?
Yeah. And it's already too late at that point. Yeah.
Late. The years passed. When did you have these meetings? When did you get the fair market value? When did you do the lease agreement? When did you have the money go from your business bank account to your personal bank account? You can't do that in April, because it would have had to been done by December 31st.
That makes a lot of sense. So taxes, to be honest, even finances, it's an overwhelming thing. Like, it's scary to talk about, even to your accountant. Yes. So what are some of the things, like, can you help us feel, what are some of the things you can help us do or tell us to do to help us feel a little bit more in control of our finances?
I think just not being afraid of it, and actually, I think that's the biggest thing. We're all afraid of the boogeyman until we turn the light on. And that's really what I say, and that's what I really think, that we just really have to turn the light on, and unfortunately, our school systems do a poor job of starting us on the path with financial literacy early on. We learn so much about math, things that we're not even going to use. Right. When we should be learning how to prepare taxes in middle school. We should be learning how to balance our books in high school, and all of those types of things. We're setting people up to be in, to be in the workforce all the time, but not giving them the skills to manage their money properly, or to even build a solid foundation for your family, because we're all working for money.
True.
So you should know how to make a dollar, how to keep a dollar, and how to manage a dollar. And we're not getting that a lot of times. So as adults, we're having to go back and try to relearn and teach ourselves these things. And so as business owners, as small business owners, making sure that you're not afraid to ask the questions, get with somebody that you feel comfortable being transparent with. That's really key, because a lot of times you'll say, "Oh, well, my account's not opening up to me." Well, if you seem like you have the answers, a lot of times we're like, "Oh, they got it covered." So you really do have to say, "I don't even know what to ask you."
Yeah.
I don't even know where to begin. And then we'll just start to ask more questions. As a strategist, we know to say, "Okay, ultimately, what are your goals?" Because it's not a one size plan for everybody. Everybody has different goals. So based upon what your goals are, whether it's to retire early, to go full force in your business, to put your kids through school, to make sure that you have that you can travel and live your best life freely.
Right.
What those goals are, we can build a plan around how to make that happen for you.
I love that. So you've enlightened me today that there's a difference between a tax preparer and a tax strategist.
I'm glad.
I think that is so important for everybody to know, because it's not just reporting the numbers, like you said. You have to have a strategy going into it. And then what are your goals? So it seemed like we need to be working with someone that we can trust, that we can talk freely to, and that can help us achieve those goals that we have.
Absolutely. And I feel like a lot of times whenever we're doing a tax analysis or we're planning, why didn't my CPA tell me this, or why didn't my preparer tell me this? And it's like, what, when they prepared your taxes? Like, that's not part of it, right? It's not a strategy session, So, and usually, even when you're preparing the taxes, you're still offering guidance to say, "Okay, well, next year, make sure you do this." I used to say this all the time, and I used to be like, make sure max out your 401k through your employer, because all of your money is taxed before you get it. So you want to put a little bit away for yourself so you can have it later and not have it be taxed. And people are like, "But wait a minute, I need my money now." It's like, well, you're not getting it now. Right. And so those strategy sessions, those are conversations to have at every level. It's not just as business owners. We have a lot more strategies that we can put in place for business owners, but even W-2 earners, there are strategies that you can master and make sure that you're taking advantage of, and some of mainly making sure that you're taking advantage of all the pre-tax savings that your employers offer. Because even though you want all your money now, if you're not taking advantage of those things, you're not getting it all.
Right. And I think in addition to that, my opinion is that even though you have someone to help you prepare your taxes or your accountant, the level of experience matter to you.
Oh, absolutely. Absolutely. Yeah. I know more now. And here's the thing too, I still learn things. I go to conferences every quarter because the laws change all the time. Every year there's new laws and new loopholes and new strategies and all of those things. And you have to be working with somebody who takes pleasure in that. It's actually, taxes are fun for me. So when I hear people say to me, like, oh my God, taxes, my eyes closed. And I'm like, mine light up. Because I see dollar signs, because it's like, oh, I get to move this money around on a puzzle, right? And I love the game Monopoly too. So, and it's really actually, that's really how life works. Like, who's buying these pieces? Who owns this piece of the board? He who owns this section is going to keep collecting.
Right.
He who owns nothing is going to have to keep going back to go back to jail and all of those things. So it's actually really fun for me. But it's a passion of mine. And like I said, it started well over 20 years ago. It wasn't a path that I just thought I was going to go down. It was one that I kind of fell into. And over the years, I have really sat firmly in it, because I realize how many people don't have the information. And I do these types of interviews and things like that just to make sure that we're getting the word out, that there's people that are approachable, that you can talk to, that understand what you're going through. And you shouldn't have this huge tax bill every year and just keep paying out this money and not sit down with somebody who can actually help you to stop the bleed.
I like that. So I know that taxes, they're different by state, but you are an enrolled agent, and so you can help people beyond whatever state, right? Tell us a little bit about that.
Yeah, so most people think CPAs and EAs and are trying to figure out what the difference is between the two. So CPAs are state licensed and they specialize in accounting. Enrolled agents are federally licensed. So I'm licensed through the IRS. I don't work for the IRS, but I'm licensed through them. So I'm federally licensed. So I'm able to help clients nationwide. Right. So, and then I specialize in, whereas the CPA specializes in accounting, I specialize in tax and tax law.
So you know you're in like right there. Okay, got it. That's good.
I talk tax in my sleep. There you go.
I was gonna say before that you light up, and I can see that excitement about you talking about taxes. Wow.
Absolutely.
Okay, so as I'm wrapping up this conversation, I know that you have a ton of resources. You've already shared so much with us already today. So tell us about some of the opportunities and resources you have coming up that we can tap into to learn more.
Absolutely. I have a free webinar coming up next week, which I'm hoping everybody taps into. It's, like I said, it's free. It's going to be really, it's at 7 p.m. on November 14th. If you want to register for that, is www.katrinalmartin.com/webinar. And we'll put it in the links and all of those things too. But definitely join. I share a lot of the insights that I talked about here, but it's an excellent starting point no matter where you're at in your business. But it's an excellent starting point for you to learn some of the strategies, the fundamental strategies, and just really see how they fully play out in a format that's going to make sense for you.
I like that. Thank you so much for your generosity. I think it's even so much more important that we attend that class, because we're getting to the end of the year. If there's any strategy that we can implement before the end of the year, now is the time to do it before it's too late. So November 14 at 7 p.m. Eastern is when this is happening. And the links to that would all be in the comments, in the description. You already know how that goes. Thank you so much, Katrina, for coming today and just being a wealth of knowledge.
Thank you, Victoria. Thank you for having me. I really appreciate this. And thank you for getting the word out to women business owners, especially, because this is going to keep your business thriving. Because one thing that a lot of business owners, when we go into business, we think about all the peak seasons, right? But every business has seasonality, and there's peaks and valleys and those things. And having this knowledge is going to sustain you during those valleys.
Yeah, that's so true. Wow. All right. I cannot wait for that webinar. I definitely. So for those that may not have time to do it, this is going to be a recorded webinar, right? So they can listen to it over and over.
Yes, but definitely sign up so we can capture your email and then we can send you out that information.
That's good. That's very important. So make sure you sign up, and thank you again for your time. I really appreciate you, Katrina, and I love everything that you've talked to us today about. If you found any value in today's episode, which I know you did, please make sure you share, you like, and you subscribe. Make sure you share it with people, because this is the time we're having those conversations. We can still have those conversations about our taxes before the end of the year. But until next time, keep taking charge of your financial journey.